Welcome to today's session. I'm actually quite excited to be here. My name is Ayla. I'm the Chief of Staff of Diffuse. With such a great digital asset expertise today on the panel, I really can't wait to dig into today's topics. It's going to be Prime Brokerage Rebooted. And on our panel today, we've got Jerome, Greg, Kevin, and Robert. But they will dig into all the details of their personal backgrounds in just a moment. I'll do a quick introduction to myself and a little introduction to the topic itself before we start asking questions and really engaging in a discussion with the panel. I have spent my entire career commercializing technology, everything from corporate innovation labs to fundraising, R&D projects, and hands-on working with AI and robotic startups. Let's just say I'm no stranger to commercializing or the operational challenges of emerging technologies. And that fits actually quite well with this topic today, my role at Diffuse. Diffuse incubates new funds. So in a nutshell, we identify new investment opportunities within the alternative asset space, and then we spin up funds to capitalize on them. And one of the main areas that we work with is the digital asset space, hence my role today here, moderating the panel. During our work, and in fact, two specific projects really lead into the topic of prime brokerage and the need for rebooting that within the digital asset space. We launched a market cap weighted index fund and a stablecoin fund that invests in DeFi projects. And within that, we noticed a few snags we ran into while trying to operationalize something in an environment where prime brokerage would often take a lot of the hassles off our hand in executing our trades, etc. So everything from custody to managing taxes, staking, lending, risk management, credit facilities, trade execution, we noticed we're just not fully baked. And that really leads us to today's topic. Most of these tasks that I just mentioned are really what a traditional prime brokerage would normally take care of. Just in case not everybody has played in the prime brokerage space before, to align it on all things terminology, really a prime broker's job is to remove the friction of deploying capital into any given investment strategy. So in the traditional finance world, that prime brokerage would have a full suite of services, including custody, trade execution, liquidity, lending, clearing, and settlement. And that's just to name a few of the bits and pieces that they take care of. Now, fast forward to 2021, digital assets is a full-blown industry, and we're all deeply engaged with. It just turns out that these prime brokerage services are just not alive at that same point as they are in traditional finance. In fact, they're more unbundled. You get point solutions. It's not a full suite, and hence institutional investors shy away from the space because of that. So that's kind of the conversation for today. We're seeing a bit of a shift, thankfully, in 2021 now, where traditional players are trying to build full suite prime brokerage solutions to help institutional investors actually get on board and start deploying capital into this asset class. And that's what we will be talking about today with our panel. A few questions you really want to dig into, and I hope we get to in a bit of detail as well, is how is traditional finance and the emerging digital asset space, how is it really different from what it was previously? What kind of new solutions do we require? And why is it exactly that so many companies are shying away from offering these full service prime brokerage solutions that we're so used to in the traditional finance world? But enough about the topic and enough about me. It's really all about the panelists today. So we'll take a quick bit here to let everybody introduce themselves. Robert, Kevin, Jerome, and Greg. Maybe we'll kick off with Greg since you're on my top left here on the screen. Do you want to share a tiny bit about yourself?
Thanks, Ayla. My name is Greg Bunn. I'm the Chief Strategy Officer at Cross Tower. We operate two spot exchanges, one in Bermuda, one in the US. We are rolling out a futures product and later in the year, our options exchange. We also operate an OTC desk and a financing business. Prior to joining Cross Tower, I was at Citadel. I was Global Head of Counterparty Strategy and Central Funding. And prior to that, I worked for a number of years at Deutsche Bank, most recently running the global prime finance business, which was at the time, a $400 billion hedge fund financing business with about 400 clients across prime brokerage, Delta One derivatives, SEC lending, listed derivatives, and clearing.
Beautiful. Robert, do you want to follow suit on that one?
Sure. Thank you very much. My name is Rob Catalanello. I am the president and CEO of B2C2 USA and the co-CEO of B2C2 Limited, which is the parent company. We are a true principal at risk liquidity provider in the crypto space, focusing on both exchange market making, but essentially offering market making services to over-the-counter clients. I have been here since February of 2019, and before that, I was in traditional finance for about 27 years with roles at JP Morgan, Goldman, Merrill Lynch, Credit Agricole. Before that, business school, and I'm an electrical engineer by training. I was actually in the field for 5 years before going back to business school. Thank you.
Thank you, Robert. And I see Jerome has already unmuted. He's ready to go. Do you want to take it next?
Great. Thanks, Ayla. Great to be here. It's my pleasure to join the panel. So I'm Jerome Dwight. I'm the president of Brane Capital. We're headquartered in Ottawa, Canada, but expanding throughout North America and internationally. Our mission is quite simply to keep digital assets safe as a custodian of cryptocurrencies. My prior background, I was previously CEO of BNY Mellon Canada, and I like to tell the story. I joined in September 2008, a few days before the financial crisis, and got firsthand view of the importance of a custodian during a period of market contraction, liquidity drying up, and helped to navigate BNY Mellon through those very challenging years, and also participated in a lot of our efforts in the U.S. marketplace as well. I later led Royal Bank of Canada's international business in wealth management in terms of their international expansion across 15 countries, and also helped build their global custody platform out of many domiciles. What attracted me to Brane and this industry was really the transformational potential that I was seeing. And, we see the role of custody as being something foundational to help power all of the other ancillary services that are required in the institutional marketplace. We like to call ourselves also a regulatory first company. And, we work closely with market participants and regulators across Canada and the US to help define what the future role of custodians will look like in the new world of crypto.
Thank you, Jerome. And we will have Kevin just top it off.
Hey guys, my name is Kevin Kang. I'm a founding principal at BKCoin Capital. We are one of the first actively managed hedge fund in digital asset space, launched in 2018, headquartered in Miami with offices in New York and Los Angeles. Prior to launching BK, I was a portfolio manager at a $5 billion fund, focusing on US equities and fixed income across all industries and sectors. And before that, I was at AllianceBernstein. We are a multi-strat fund. We started with market neutral strategy, which is our flagship arbitrage-focused fund. And then now we offer Bitcoin Smart Beta, Ethereum Smart Beta, DeFi fund, as well as market-making strategies for our clients.
Beautiful. All right. I love it. We're totally on time, and we'll hop straight into questions. Then that gives us a little bit more juice to work with. So we'll divide the panel discussion into three core pillars to discuss today. One of them is the complexities in crypto prime brokerage itself and the difference between that and traditional finance. The second bucket is all about innovation in prime brokerage, what technologies and also business model innovations are coming online. And then the last bit is the future of prime brokerage. What does this look like in a cyclical market? What change is ever ending? And actually, I feel like if I miss a single day of my reading, I'm behind the curve on all things crypto news. So how do we deal with this ever-changing market? We'll kind of kick off with the complexities in prime brokerage. I'll direct the first one actually at Rob in this case, at Greg in this case. Robert, why are the prime brokerage services in crypto not as straightforward as in traditional finance, Robert?
Well, I would have to think that being a new product area, there's still a lot of uncertainty. First of all, there are vast differences between simple things like settlement dates, funding rates, wallet solutions, a variety of different blockchains. So there really is a lack of standardization in the industry that one does not find in traditional finance. Next, and I think this is a very important point as well, is that most prime brokers in traditional markets will offer their services on a wide variety of product. And in the crypto space right now, there still is a somewhat limited product base that can, in fact, be prime broked, for lack of a better verb. And as such, with no real standard, you have a lot of seemingly bespoke solutions. So clients who are looking for the services, will really have to do a lot of work, not only to determine which is the best prime brokerage solution for them, best in class, but also which meets their needs the best. So I really think it has much more to do with a lack of standardization for the existing products and just the few number of products more than anything else, particularly when compared to traditional markets.
Makes a lot of sense. And that kind of ties neatly into the next talking point, which is when you're looking at the existing solutions that you mentioned, there's a few of them, but also they're often from emerging providers, number one. And then two is they often only offer a single service under their own umbrella. So there's not multi-services like you would have in traditional finance. Greg, what do you think is the real reason why institutions are not comfortable cobbling together their own suite of solutions with 3, 4, 5 providers that are in the emerging tech space?
Well, I think to Rob's point, it's non-standard and it's not what they are used to. I mean, I would start by saying that we've actually come a really long way in terms of this space being fit for purpose for institutions. 3 years ago, I did a project for a large hedge fund looking at the space. And at that time, we couldn't get past the AML KYC aspect. So it was a complete non-starter. Whereas today, I feel that pretty much all of the friction points have been identified, even if they haven't been worked out. So at least we have a good lay of the land. For example, on the execution side, in equity markets, you have a regulation that forces best execution, right, in Reg NMS. So that essentially ensures that institutions meet their best execution obligations. We don't have that in crypto. And of course, liquidity is hugely fragmented. But what we are starting to see is the emergence of some really good smart order routers and liquidity pools, pre and post trade analytics, reporting, and this is getting institutions much more comfortable that they can meet best ex obligations. From a settlement and custody perspective, it's pretty daunting because it's completely non-standard and doesn't resemble anything that they're used to. And there's real complexity around how to secure your assets. Nobody has any experience of maintaining private keys, multi-sig wallets, hot, cold storage setups, and so on. The traditional space, obviously, much more significantly straightforward, and it's largely a back office function. But I feel that with education, we're getting people to where they need to be. So essentially, when we started discussing these with clients, or this space with clients in particular around custody, they would often say things like, when Boney or JP Morgan are in the space, we'll be comfortable. But we spend a lot of time educating people and really getting them comfortable that there are some really high-grade institutional crypto-native custody solutions out there. So there's a lot of hand-holding, and there's certainly still bits of the infrastructure that need to be connected, and there are numerous inefficiencies. But I don't feel today, which is different from probably a year ago, that there are major issues across execution, settlement, and custody that are outright barriers to institutional entry.
I think this is exactly Jerome's backyard is all things custody. What is the reason why you're focusing solely on custody and not starting to include other services underneath your same umbrella? And maybe also speak to a couple of points that Greg mentioned, which is the change in the custody service offering that's happened in the last year or so. What's kind of transformed in that space as well? You are on mute.
Thanks. Custody is core to strengthening the confidence and transparency in the marketplace, especially with institutional investors. And a lot of them were my former clients when I was running Boney Mellon in Canada. they would ask for all of the things that, they're asking for today, settlement time, risk management, analytics, and things like that. Why we chose just to focus on custody is we see custody as a very high, requiring a very high fiduciary standard, which requires implicitly us being unconflicted. Over the course of our years, we've had many opportunities to partner, acquire, position ourselves with certain exchanges and market participants, and we've been very careful to be independent of any exchanges and really be a fully segregated custodian. And when you look out into the market, especially in times of financial crisis, I know it's been over 10 years now, but there's always a crisis around the corner or volatility. You want to be in a position where your custodian at least is completely removed from any conflict, and that kind of brings a stabilization to the marketplace. And we see that as our role. So we kind of look at what we do as having three core pillars. One is a very high standard of risk management. So when you walk into our shop, we kind of employ all of the risk management that you would see at a Boney Mellon to give, again, that confidence to institutions that we're actually not just a technology company, but we're also a financial institution. The other is compliance. I think it was said early on in the day that, regulation is coming. And so we've been very proactive in working with regulators in the US and Canada and helping to define what smart regulation would be from a custody perspective, the role of a compliance function, the role of settlement, reconciliations, all that nitty-gritty back office stuff that custodians have to do. We see that as essential. And of course, the third pillar being, fit for purpose technology that's built on the blockchain, native to the blockchain, that can really help us, innovate in real time as new assets come to market. So we feel that as a very core part of our mission to be independent. It gives us a very clear mission in terms of who we support and why we exist.
One follow-on question to that, maybe, how do you balance the difference between regulatory compliance, but then also being ahead of the curve in terms of being able to custody additional or new assets that come online on a day-to-day basis?
Mm-hmm. Yeah, I mean, I think our tact has been be very proactive with regulators. So we talk to all of our regulators across multiple jurisdictions, whether that's Canada, the US, Bermuda, Europe, and just, give them as much visibility. And, we see our role as educating in terms of how, traditional folks like me who come from traditional securities and banking markets can, help bridge that, journey and, and help them also define regulatory supervision frameworks that make sense. So they're not trying to force crypto into the old models. So we want to be at the cutting edge of innovation, support new assets, but we see, usually our first and second call are to the regulators to keep them appraised of how we support that.
Makes sense. Kevin, you sit on the other side of that table as a user of the prime brokerage services, and during our prep call, we chatted a little bit about some of the gaps that you're observing personally, especially when it comes to the difference between different countries in terms of regulations and what each service provider can provide for each different jurisdictions. Could you share a little bit about these challenges and how they show up, so we don't just think of it as an isolated single country issue, but a kind of a cross geographical problem statement when it comes to providing prime brokerage service on a global scale?
Sure. Going back to lack of regulatory concern, everyone's lawmakers from around the world are scrambling now to try to figure out what the best way to go about it is, right? Especially when it comes to decentralized finance, where it empowers every single individual around the world. But then there's got to be some type of regulations around it. Going back to centralized power, which is the government or traditional players. So there's going to be interesting to see how this all plays out in the future. But also, if you look at different regulations from around the world. So, for instance, for our onshore clients who are invested in our U.S. fund, they're not allowed to trade in offshore exchanges such as Binance, who will be that offer derivatives with significant volume, whereas our offshore clients, our offshore funds based out of British Virgin Islands, they're allowed to trade on any of those offshore exchanges. So these are some of the gaps that future prime brokers will have to resolve. I think we're getting very close to it with hearing from some of our close counterparties. And as more traditional prime brokers acquire or merge with emerging players in the space, there are going to be some challenges as well, especially with execution and integration with such nascent technology that includes smart contract that can be directly controlled, which is a strong concern for regulators, right? And especially with cultural clash too, when a traditional prime broker acquires some of the new players in the space. We've spoken with some of our friends in the space who left traditional finance to be in this new exciting space, and they just got acquired by a traditional player. So he was saying, I just left the firm, exact same firm for good reason, and now I'm going back to the exact same firm, right? So there's always going to be a battle between traditional players trying to join this new exciting space, as well as crypto people refusing to go back to traditional players.
That's a really good point. I've observed that a lot. After my time at Refinitiv, I saw a lot of exits and re-entries back into the business. I see Jerome smiling a bit, and I might pick on you again for the next question, especially because you sit within the tech space here. Which tech innovations within the prime brokerage space, and we can touch on custody in your case, are really propelling the industry forward? What is coming online in terms of just tech solutions to solve all traditional problems that you're interested in, excited by?
Is that for me?
Yeah, go for it.
Okay. We've got a pretty exciting roadmap of products we're rolling out for institutional clients. I think risk management and data analytics is going to be a big part of the whole product evolution, and we've got some really smart people working on how we can embed that into our vault, custody vault services, and we're making great effort to build the code on the blockchain. So leave it on the native to the blockchain, which allows us some really cool functionality and the ability to innovate going into the future. But the things that really get me excited around technology and product innovation is certainly collateral financing. The financing market is really starting to develop, and we see custodians as having a pretty important role in that. And the technology underpinning that has a lot to do with collateral management, data analytics, and also risk management. So we're pretty excited about bringing new technology into the space that we still kind of act as a custodian of crypto assets, but helping to put it to work, make it more efficient, and help institutions understand that there's like ROI behind using a prime broker or a custodian.
Thanks. So maybe I'll let Rob chime in here and play the devil's advocate a tiny bit. Given that there's a lot of innovation within the prime brokerage space, how much of it is truly innovating, truly changing the way that the system operates versus kind of a marginal adaptation of something that already exists?
That's a good question. It's hard to answer, but clearly, the blockchain technology, will eventually, replace a lot of. It will play a major part in society, I think, and it will vastly change various sectors. I think healthcare and financial services in particular, right? Why do I have to worry about clearing through DTCC if I can just send, if I can just send a secure transaction from my wallet to my counterpart's wallet? Everything's done instantaneously. It's done on the blockchain, so it's immutable, and tamper-proof. So, by and large, everything is just going to be an improvement on what's going on, I think, in the traditional space, except that in itself is something new. So I wouldn't necessarily say that, I wouldn't want to downplay improvements or modifications of something that's existing and moving it into a new technology, because I just think that's kind of the way history works and invention works. But again, I think the big I think the big roadblock still is, balance sheet is still very expensive, particularly for a lot of players in the space. And in order to offer a very robust prime brokerage solution, you really have to justify the balance sheet usage as it pertains to the return you're going to get, given your cost of capital. Now, technology is a great way to do that, right? So because it can help make you extremely efficient, especially compared to traditional prime brokerage space. I know that in our business, for example, on May 19th, the crazy day we had about a month ago, we were able to continue settling trades throughout the day, even though lots of exchanges either slowed down or stopped. And that's in addition, we kept on, and we were processing one settlement every 2 minutes. So we did 720 individual settlements, and with a global staff of maybe 8 or 9 people, which I think is extremely impressive. And a lot of it's because of technology. So don't downplay it. Technology, I think, is what is going to make prime brokerage in the space successful, because it makes people so efficient, and thereby allowing them to get adequate, in fact, impressive returns on capital.
Makes a lot of sense. And kind of touching on that point that you made in terms of balance sheet usage, that being a core question mark that still is to be resolved for completely. Greg, in your view, if you could wave a magic wand and solve one of these issues, which do you think is most important? Is it custody? Is it the usage of balance sheet? Is it settlement and using technology for that? Or what do you think is kind of one of the key success factors of taking prime brokerage to the next level within the next, say, 12 to 18 months?
Yeah, I think we've seen some really good developments over the last 6 months, and in particular this year on the product side. I mean, we've seen really explosive growth in the borrow lend space. We've seen some innovative total return swap type products. We've seen the development of some traditional refinancing tools that look and feel more like a traditional repo market. And we've also seen firms adding the sort of ancillary stuff that you'd find in a prime broker, customer service, much more high touch, white glove sort of services. And I've even heard some talk about cap intro. That said, I still think there is a long way to go in terms of getting to what looks and feels like a true PB on the financing side, which is really the core of the business. And there's various reasons for this, one of which is that there are practices in crypto that are crypto is relatively indifferent to, that are front and center in traditional markets and that are important to institutional players. So, for example, taking unsecured counterparty credit exposure to uncreditworthy counterparties, unlimited rehypothecation and reuse of assets, non-standard documentation, and so on. So this may not be a blocker to institutions, but it certainly leads to inefficiency that hedge funds, for example, are not used to. So I'm going to pick up on a point that Rob raised at the outset, is about standardization. And the key thing to solve the financing aspect of prime services is really standardization. So to look at traditional finance, the construct for equity prime brokerage was actually worked out by the industry in conjunction with the regulators in the late 90s, and it operates under an SEC no action letter, because there are some practices like changing the title of securities through rehypothecation that couldn't operate without that kind of framework that was all worked out together. So In the traditional space, we compete on spreads, we compete on infrastructure, we compete on risk management, but we don't compete on market structure and documentation, so that we can have a construct that is broadly standardized and that allows funds to trade seamlessly with across multiple counterparties, multiple products, and on multiple venues. So if we can drive towards standardization, that solves for a bunch of things. So once you have standardization, you can be much more efficient in how you finance and service assets. In particular, you can cross-margin across different products. You can use your collateral efficiently. So to Jerome's point, I see this as a big thing. Collateral management is a huge thing in the space, as it is for any prime. So in a typical prime business, you might be earning spreads of LIBOR plus 50 and having to turn that into a return on equity of mid-teens or high teens. And in order to do that, you need to have very efficient funding structures, and you need to have very good infrastructure and technology. So that's really the key thing. I think cross-margining is the key to solving financing for institutional players. And once you have that, that will make the market just much bigger and more efficient. So again, it's technology, it's infrastructure, it's expertise, and it's probably going to require the industry to come together. Maybe certainly the key crypto players will need to collaborate, and we may see some of the smaller primes, banks, and exchanges getting involved as well, because I think, to Rob's point, balance sheet is a big question, and there still isn't enough capital in the space to support a full service financing, PB financing business.
Very good point. Jerome, you're unmuted. Did you want to add to Greg's point there?
Yeah, I'll just fully agree with standardization. I think for the markets to get a certain level of efficiency, we kind of all have to be on the same playing field. And so one of the things we do pretty regularly is, we help our clients who are getting into this space with documentation, and we try to standardize it as much as we can so that, every client we service as a custodian is working off of some pretty standardized operating procedures. And of course, there's some customization, but we see that as, certainly in the Canadian market, where there's still room for us to standardize. Our implementation teams go in and just, help institutions think through and document the processes. The other point on margin rules, speaking about the Canadian market is somewhat, taking some big strides. You would have read, we launched the world's first ETF in Bitcoin, and in a matter of weeks surpassed a few $1 billion in AUM. And I think the regulators have shown some flexibility, and hopefully some of the international regulators will follow. But there is some work being done now on margin rules, and with banks involved as well. So what are the minimum capital ratios you need to keep if you're holding crypto on your balance sheet? So there is some evolution there. But still a long ways to go.
That kind of takes it to a nice closing point with, and I might take Kevin up on this next one. Greg and Rob both mentioned service as one of the aspects, so kind of that white glove service. And I'll add something to that also, fees. From your perspective, what has been your experience, just the service quality that's being delivered currently in the prime broker space? Let's say you're working with 3-4 different providers versus one single unified solution. What has been your experience in terms of fees and service quality? And is there room for improvement, or what have you seen improve also over the last year?
Yeah, in terms of quality, everyone's fighting for the same piece of pie, right? Because the space is still so nascent. So in terms of quality, I would say they're all great. But in terms of fees, there are obviously different providers with better spreads, better fee structure, et cetera. So, just as in traditional finance space, I think there's going to be, top tier PBs as well as mid tier and low tier as well. And as new players form partnerships with their clients, I think working hand in hand to tailor some of these solutions to the specific needs of clients is super important. Because in the beginning, when we first started a relationship with some of these OTC desk or PB desk, they tend to just force all their offerings, right? They say without really knowing what we do, because what we do is different from what other funds may do. So once we get on the call with their team and explain what we focus on, what we trade on, what are some of the offerings that we may be interested in, then they come back to us with better tailored solutions and, and offer us some of those improvements, right? So I think proactively offering suggestions or making improvements that streamline the process utilized by clients is very important. And, Greg and Jerome had a great point in standardization, because some of the financial institutions are now holding crypto assets. So we're thinking about, okay, what will the capital charges for those assets should be? What is the regulatory guidance for an operationally safe way to handle some of these assets? So I think as this digital asset universe becomes too fragmented, it could be a financial risk. So I think standardization of the space is really important for not only for consumer protection, but also financial stability.
And touching on the stability a bit, we'll dive into the next pillar, which is the future of prime brokerage, just looking out into the next year or two, and also taking into account the cyclical nature of this space. Robert, you made a really good point about the mid-May volatility that we had just a few weeks ago. Could you maybe speak a little bit about how you believe that these kinds of volatility cycles and also maybe cooling periods in the crypto space in general, how will that affect innovation within the space? Do you think it's going to clamp it down because there's less capital floating around, or do you think it's just going to be a really good time for people to double down on building good infrastructure? What are your thoughts on that topic?
Well, if we look at what happened on May 19th versus what happened in March of 2020, right? So it was a span of maybe 15 months, right? And having had the pleasure of working through both of those extremely volatile days, I can say without hesitation that that the market fared so much better in May than it did in May of 21 as opposed to March of 20. And keep in mind, we had seen an explosive growth in new products between the two, specifically, on the lending side. People have talked about it, options are playing a bigger part as well. So what that tells me is, the more products that are offered, the more sophisticated participants that are involved, I think that will attract, inspire confidence and will attract a variety of new clients, new client types, and that in general has a dampening effect on the extreme volatility moves. Now, none of that would have been possible without continued investment in the space. I personally think that these lulls will actually, will actually help spur innovation because, let's face it, necessity is the mother of invention, and if spreads are going to collapse, if volatility is going to dampen, then the chance to make easy money on trading will force people to really focus on efficiencies. So from our perspective, we think this is a great opportunity to innovate, to explore entering new products, and to do everything we can with our existing processes to make them much more efficient and robust. So, while it's not as great as Bitcoin going up, 5% a day and everybody happy, breaking out the Bitcoin 70,000 hats, it's something I think that that will be a force for good, and it will actually help the prime brokerage space, right? Because people will, these periods of volatility will really show what's lacking in terms of, financing, custody, the ability to settle, credit, things like that. So, we have to embrace the challenge and do what we can. And I think the market has done that in the past and will continue to do so.
Yeah, you're absolutely right. And there's usually two things that happen in these intense periods. We get improved infrastructure, and the second thing, that there's also a new flood of products that come onto the market when there's a little bit of a pause in the chase after what's already there. And I'll pick this one up with Jerome in terms of DeFi or NFTs and other more exotic products that are coming on the market. And there's a massive appetite, maybe not actionable appetite, but definitely interest and people from the institutional space as well, trying to poke in there and seeing how can they take advantage of these emerging new products, especially within the DeFi space. What have you seen? Maybe also contrast and compare some of the geographical differences between the US and Canada in terms of making these new products accessible for investment, both for the public and for institutional players.
Yeah, there's clearly lots of innovation going on, like we're seeing in Canada, the US, and globally. The regulators are playing hard to catch up. I kind of liken it to speeding down the highway in a Ferrari while you're trying to change the tires at the same time. Everyone has to keep up. The retail and institutional investor appetite is at an all-time high right now. The asset class is performing well. As I mentioned, the first ETF that was launched out of Canada in the world performed really well, and it kind of did what it was supposed to, even during the recent volatility. So that sort of passed a certain test, if you will. So there are certainly, as I mentioned, lending products are certainly, more and more in the conversation. And the traditional banks are also interested. Certainly they're taking baby steps and looking at, can we do fiat loans backed by crypto and sort of taking a small step into the space. Ultimately, our conversations with whether it's hedge funds, pension funds, starts with the chief risk officer, and our question, is, are you comfortable that your ultimate, assets are safe? And that's all we do. Like we give you a safe custody platform and help you innovate and access some of these new and emerging technologies. And we make sure that our technology platform can evolve to support those, new and exciting products. But we're very cautious about just being a custodian and supporting prime brokers and supporting exchanges and also bringing regulators into that conversation. So we can kind of play the long game, right? And we think because of the complexity, specialized custodians are really essential. And so as much as we see all the products and, we are very excited to, kind of support those. And I think our private key technology is one of the most advanced in terms of allowing us to, innovate. We're also sort of very focused on custody as a solution, but certainly Canada is a real hotbed of innovation, and we'll continue to see things. But certainly on the finance and collateral management, escrow products, these are some of the things that institutions are pretty excited to get in on.
And on that point, specifically risk management, collateral management, et cetera, Kevin made a really good point earlier during a prep conversation around decentralization or centralization when it comes to massive volatility and the potential of a prime brokerage failure. What are your thoughts on that, Kevin? Just how should this ecosystem deal with this level of volatility from just a risk management perspective? Is this decentralization the only way to go, or do we need to step in and make this environment a little bit more safe by putting some centralized solutions in the middle?
I think we're going to need a little bit of both, right? Because everyone needs investor protections as well as regulatory clarity. But, as you mentioned, May 19th, billions of dollars were liquidated within a matter of a couple of hours. So if a small boutique PB were to hold some of those positions, that would have blown up, right? So that kind of defeats the purpose of decentralized assets and this new digital assets where, maybe individual traders were liquidated, but in terms of the whole asset class, nothing really happened. There was no big name being blown up, and now you can get your assets back from XYZ PB, right? So I think that's the beauty of the space. And with the rate of growth that this space has, it makes it very difficult for prime brokerage services to constantly adapt to the growing utility and accessibility that digital assets provide. And as you mentioned, within the DeFi space, there's so much innovation in the space. But at the same time, when you tag DeFi on top of a stablecoin, what you're essentially doing is introducing leverage into a system that is meant to be one-to-one backed. So when you see the DeFi value locked at $40 billion, how much is actually leverage, right? It may be rehypothecated twice or three times. So is the actual value locked $20 billion, $10 billion? No one really knows. And there's always that smart contract risk too. So hiring the right technical team to be able to access the risk of protocol failure and the timing risk in terms of how quickly the market can evolve, both from a technology and a regulatory standpoint, will be very important. But I think from traditional allocators' point of view, they tend to get scared because it's very new. The speed of innovation is very quick. So they say, okay, we're just going to take a step back and just not mess with it. But also, if you look at SPACs too, SPACs come from very traditional equities world, but on the back of SEC's lack of staff on focusing on SPACs, it just blew up the last couple of years. But they also have significant policy and regulatory questions as well as investor protection questions. So with that, I think digital assets offer much better solutions. And I think it'll be important for everyone in the space to work with regulators to come up with the right environment and regulations so the space can grow, but not hinder it.
And on that topic specifically, just given Global DCA is part of this event and is co-organizing it, and we actually sit on the policy and regulation committee there as well. I'd love to hear some of the audience questions, if there are any, for you to pass them on to Bruce. But as the next one, I'll kind of pop over to Greg here, and I'd love to hear your thoughts on Kevin's notes in terms of risk management, and also how the regulatory bodies should come in or should not come in to be of support to help regulate. What are your thoughts on that?
Yeah, well, to the earlier point about how prime brokerage got solved in the late 90s, at least we knew who the regulator was every step of the way, and we were able to create a construct in the broker-dealer construct that protected customers and created a very clear set of ground rules for everybody to operate on. I don't know how that happens in crypto, given the nascency of the space and the lack of clarity around who is regulating what in the space. Perhaps it's exactly to your point. It's industry bodies and participants, and we need to get more on the front foot about how we engage around regulation. Because once the lay of the land is clear, that's just a better starting point for everyone. And we've seen this be successful in the evolution of prime brokerage in both the equities and the fixed income space historically. So, that's kind of my hope.
And we've seen it, despite of all the regulatory changes and uncertainty that's especially come online within the last just 3-4 weeks or so. And then, of course, we've got larger voices chiming in, like our favorite Mr. Tesla, to kind of affect the environment around us at a whim. I'm quite curious, Robert, what are your thoughts on where you see the regulatory environment evolving to, and especially from a prime brokerage perspective? Do you believe that there will be just regulatory changes that would ease the process of using prime brokerage service as an institution and making them more comfortable? So it's not just all on the shoulders of the product creators or service providers. It's actually partially a responsibility of the regulatory bodies. I might direct that one to Robert.
I think, Ray, I think it's a very safe bet to assume that regulation in the space is going to increase. I think we're seeing it spread from Asia into Europe, and soon it'll hit in the United States. And one would have to assume that the regulators will stick with what they know as it pertains to their overall framework. So we are preparing, for, we are preparing and taking steps to be ready to go, assuming that the same exact regulation that exists in securities markets will be, present in crypto sooner rather than later. I do think in the U.S., though, the regulator will take a thorough, well thought out approach. So I don't think it's going to be something where they show up on Monday and say, okay, guys, you have 2 weeks, happy days. But I do expect there to be a significant increase. And I just think it's prudent to prepare for that.
I can see Jerome nodding there. Do you kind of in anticipation build systems and processes that'll help you kind of work through those anticipated changes in regulatory requirements, just so you're not, caught in the cold?
Yeah, we've been doing that for the last 6 months. And in fact, we built the first end-to-end regulatory compliance manual for crypto custody in Canada. And we actually use it. We've socialized it with multiple regulators. And it's one of our, sort of differentiation points when we talk to institutional investors about our custody vault. We're actually educating them and helping them build their own policy manuals around regulated custody and how to use, a custodian and work with us. We think it's fundamental. And we think, so when you look at exchanges, for example, I think Mark Cuban mentioned right at the start of the day that they're going to be treated as dealers and come under regulation. That's exactly what's happened in Canada. Exchanges have, been forced to come under the regulation of investment dealers. And so we've been planning for this for probably the last 6 to 9 months. And, we're working with a number of exchanges, actually helping them down the path of, getting regulated and also strengthening their platform by showing that they have, a third-party custodian. We built an actual standalone compliance team. They almost act as consultants to market participants, because one of our core principles is we do only want to deal with regulated institutions. So it's in our interest that market participants get regulated. And so we're working, hand in hand with sort of regulators and market participants, certainly in Canada and also in the US, and helping them through that journey. So we kind of see ourselves as half consultants, half custodians in this process.
And I think, Jerome, your chat about how to innovate within the custody space actually triggered an audience question. DeFi versus CeFi versus central bank custody. What's really the difference on the back end there? How do they need to be managed differently? And I'm speaking from complete experience. Custody has been the biggest pain for all the products that Diffuse is launching. And so I'd love to hear your view on this one.
Well, I mean, I think, we think of it in terms of, can you ultimately custody the private keys and keep them safe? And we use, all multi-party authorities technology to make sure that the keys are appropriately secured. When it comes to the nuances of each of these individual products, we're continuing to evolve in our capabilities. So it would be premature for me to kind of go down one product suite. But I will say, though, that our technology team is very busy, making sure that, the custody of it, as well as the reporting of it, because we see that as, anything we secure in our vault needs to be fully transparent, segregated accounts, omnibus/segregated accounts, avoiding of the commingling, all of that we need to think through when we start to support these new innovations. So, we're open to all of these. And, as asset manufacturers, approach us. We've got a number of irons in the fire in terms of supporting those new product classes.
And I saw Greg making some notes there. We've got about 4 minutes left. I'd love to just open the room to the speakers to share any thoughts or final things that we didn't touch on and important points that we should have spoken about, didn't have a chance to. Greg, do you have anything else, any other thoughts that you'd like the audience to know about and kind of insights that you'd like to share?
Yeah, I'm just really excited about the growth of the space. I mean, pretty obvious thing to say, but if we look at crypto native funds at this stage, we estimate about $4 billion in hedge funds. That's about 0.1%, of total money in hedge funds. So the ability for that to grow. I think in our prep call, you asked me, Ayla, a question about, do we think we could have homegrown institutional crypto funds that ultimately end up as large as big institutional hedge funds? I think for sure the space is going to grow. It's going to grow through asset allocation. It's going to grow through performance. Maybe it'll be tougher this year than last year, and it'll grow through a wide expansion of the investor base. But where I see the next kick up is really traditional hedge funds moving into the space. We've seen a lot of that in the last couple of months, and it seems to be picking up momentum. And if you think of a $50 billion fund making an allocation to this space, it's going to be meaningful. So I'm seeing that as kind of the next leg up.
Yeah, and the interesting bit is
that as a final thought.
Yeah, once that level of capital moves over, you can't take it back either as quickly as it got in there. There's a little bit of sticking power behind that one. So that's going to add to a bit of liquidity problems or kind of solve some liquidity problems that are currently in the market. Robert, on your end, any final thoughts, any ideas you'd like to share or things we really should have touched on in terms of what you're excited about that's coming up in the next year or two, or maybe some things you're scared of in the next year or two? Who's your take the floor?
Well, I think that Jerome, in his last comments, really touched on a point that will be a true differentiator, and that is the ability to custody private keys as compared to a potential, software as a service solution for that. I think whichever way institutions decide to go. Now, I'm talking about traditional institutions because one would expect them to bring significantly more assets to the party. Will be a big factor in the whole future direction of prime services in the space. So to me, that's a very exciting space to watch. There are excellent players on both sides of the fence, and I think it's something that everyone should really pay attention to. And I want to thank Jerome for bringing that up.
Thank you. And maybe as a last one, Kevin, since you're in the strategy space and actually committing capital to some of the ideas that your team has, where do you see the biggest alpha coming up in the next year or so? Where would you place your bets?
Sure. So as we evolved for the last 3 years, I think the way we are envisioning the space growing is just as there's different types of strategies of different hedge funds, right? There are long-short equity funds, market neutral funds, merger arb fund, credit fund, etc. The way we envision is this digital asset space growing where there will be various strategies within digital assets. Hence, we started offering Bitcoin Smart Beta, Ethereum Smart Beta strategies, which is to accumulate more Bitcoin, to accumulate more Ethereum, as well as DeFi fund and market making strategies. So as this space grows, we envision within digital assets, rather than just buying Bitcoin and holding on to it, buying Ethereum and holding on to it, I think there's going to be a lot more sophisticated strategies coming up in the space, and we are trying to be the forefront of that evolution.
Amazing. And we are so on time. It's incredible. Just a quick closing remark. Actually, there's going to be at 5 p.m., the networking room is going to open, and that's right after the next session. A big, massive thank you to Jerome, Kevin, Robert, and Greg for joining us today and sharing their insights. I hope everybody took proper notes and is now planning their own prime brokerage launch on the back end of this. If you have any questions for me, please find me on LinkedIn, and I'm sure the other speakers would also be happy to entertain some LinkedIn connections after this. Thank you so much for joining today, and I really appreciate your time. See you all later.